Stock markets go up and down. It's their nature. Like a roller coaster, there are thrills of the climb and dips that take your breath away. Don't let the dips scare you away from investing altogether. Remember, these ups and downs are perfectly normal. What goes down must come up, and vice versa. This constant fluctuation is what experts call market volatility. Knowing that volatility is part of the game is key. Don't panic when the market takes a tumble. Instead, take a deep breath and remember that long-term success comes from riding out the lows. When the market plunges, fear can grip investors. You see your portfolio shrinking and your gut screams, "Sell everything." But beware, fear is a powerful emotion that can lead to impulsive and often regrettable decisions. On the flip side, when the market's soaring, greed can take hold. You hear stories of overnight millionaires and feel the urge to jump on the bandwagon, often making risky bets in hopes of striking it rich quickly. Remember, neither fear nor greed are good investment advisors. They cloud our judgment and lead to chasing short-term gains instead of focusing on long-term goals. It's easy to get caught up in the market frenzy, but the key is to stay calm and think rationally. Don't make rash decisions based on short-term market fluctuations. One of the best ways to combat fear and greed is to have a well-defined investment plan. This plan should outline your financial goals, risk tolerance, and investment timeline. Having a plan helps you stay focused on the long game, even when the market throws a curveball. It reminds you why you invested in the first place and prevents emotional reactions from derailing your financial future. When the market takes a downturn, it's natural to worry about your investments. But remember, not all your money needs to be in high-risk assets. Diversification is key to weathering market storms. Don't put all your eggs in one basket. Instead, spread your investments across different asset classes, sectors, and geographies. This strategy helps mitigate losses. When one area of the market is down, another might be up, providing a buffer for your portfolio. Section 5. Finding the diamonds in the market rough. While a falling market can be unsettling, it also presents unique opportunities. As share prices drop, bargains emerge for savvy investors. Think of it as a sale at your favorite store. You get to buy quality items at a discounted price. The same logic applies to the stock market during a downturn. This is where research and due diligence are crucial. Take time to study companies with solid fundamentals that are now trading at attractive prices. Section 6. A time for reaping and sowing. Down markets can be a good time to reassess your portfolio. Take a look at your holdings and see if any adjustments are needed. Perhaps it's time to sell some underperforming assets and reinvest in companies with stronger growth potential. Or maybe it's an opportunity to diversify further into different sectors. Consider it a financial spring cleaning. Get rid of what's not working and plant new seeds for future growth. Section 7. The Wise Counsel of Experience. Navigating a falling market can be daunting, but you don't have to do it alone. Seek advice from trusted financial professionals. A financial advisor can provide personalized guidance based on your individual circumstances. They can help you develop a solid investment strategy, manage risk, and make informed decisions. Remember, financial advisors are there to guide you through the ups and downs of the market. Don't hesitate to reach out for their expertise. Section 8. Building your financial arsenal. Knowledge is power, especially when it comes to investing. Take the time to educate yourself about financial markets and investment strategies. There are countless resources available, from books and articles to podcasts and online courses. The more you understand, the better equipped you'll be to navigate market fluctuations. Remember, investing is a lifelong learning journey. The more you know, the more confident and in control of your financial future you'll feel. Section 9. The Long View. Weathering storms, reaching goals. Investing is a marathon, not a sprint. There will be good times and tough times. But by staying calm, making informed decisions, and seeking expert advice, you can weather the storms and come out stronger. Remember, the stock market has always recovered from downturns. By staying focused on your long-term goals and not letting fear dictate your actions, you can achieve your financial aspirations.